Ticker symbol DGRO, or the iShares Core Dividend Growth ETF, has been one of my favorite dividend growth style ETFs for a while now. Now this is because this ETF has a strong, high-quality basket of holdings, has grown significantly as far as price return goes, but also more importantly, especially to the context of this video, DGRO has raised their dividend consistently over time, giving dividend growth investors more and more cash flow historically every single quarter. Now in this video, we're going to break down exactly what the iShares Core Dividend Growth ETF is and how this ETF works, but most importantly, we're going to dig into the actual dividends that this ETF has paid historically and go over the most recent dividend payout, which is up significantly from the one the previous year. So if you're a dividend growth style ETF looking to build a long-term portfolio with the highest quality ETFs across the market, make sure to drop a like down below, stick around because you are not going to want to miss this one. Real quick, for those that haven't already, make sure to go to the first link in my description and grab my new dividend investing ebook where I share exactly how I went from $0 invested to now earning over $6,000 on a monthly basis and over $1 million invested in the markets. Along with the ebook, you're also going to receive my custom dividend tracker where you can track your dividend progress on an ongoing basis and reach your dividend investing goals. So make sure to grab yourself a copy of my dividend investing ebook and the new dividend tracker today. It's the first link in my description. So first off, coming over here on the iShares website, it says why DGRO, in case some of you guys are not very familiar with this one. It says number one, DGRO offers low cost exposure to US stocks focused on dividend growth, meaning this ETF focuses on stocks that pay more and more in dividends, at least historically over time. Now, even though dividends and dividend growth is not going to be the main focus for every single investor out there, for investors like myself that are currently building out a long-term portfolio of different dividend-paying stocks and ETFs that I'm looking to supplement my actual active income with later on, dividend growth is extremely important because who doesn't want to get paid more and more in dividends over time, but more importantly, to keep up with things like lifestyle creep and inflation. Number two, under why DGRO, it says access companies that have a history of sustained dividend growth and that are broadly diversified across industries. And this ETF is extremely diversified. We're going to go over the holdings here in a second. And lastly, use at the core of your portfolio to seek income. Now, one of the most important things about any ETF, of course, is the holdings within the ETF and especially the top 10 holdings. Some of the top names in DGRO is what makes this ETF one of my favorite dividend growth style ETFs across the entire market. And this is because this ETF is extremely heavy in names like Apple, Microsoft, which who's going to complain about having more exposure to those two? But also dividend growth style names like ExxonMobil, we have Chevron, names like JP Morgan, Johnson & Johnson, we have names like Broadcom, abbvie, Procter & Gamble, Merck. A high quality, well-diversified top 10 holdings is going to keep this fund afloat no matter what really happens in the markets. Looking further into DGRO, I explained earlier in the intro that this ETF, although pays more and more in dividends over time, has an extremely well-diversified basket of holdings. On top of that, this ETF has grown in price significantly, and this is over the last 10 or so years. The ETF has over doubled as far as price goes, up 130.7% on the max time frame. On the 1 year time frame, up 12.8%. Year to date, this ETF is up 6%. Now, expense ratio is also an important metric, especially if you're looking to hold an ETF long term and stack more and more shares. And DGRO's expense ratio is 0.08%. Now, we talked about some of the top names in this ETF, but also just as important, looking at the actual sector breakdown, this is going to be something else to consider if you are looking to buy into an ETF. You want to know exactly what you're going to have exposure to, at least for the most part. Now, financials and technology together make up almost 40% of this ETF. So like I said, if you already have a portfolio that's extremely heavy in maybe some of these sectors, maybe it's not necessarily the perfect fund for you, but overall with 400 plus holdings, this ETF is extremely diversified. And honestly, what I would consider sort of a one-size-fits-all dividend growth ETF for basically any dividend growth investor across the entire markets. Now, speaking of dividends and dividend growth, DGRO has a trailing 12-month dividend yield of around 2.3 to 2.6%. The trailing 12-month dividend yield is going to be bigger than this because DGRO just as of recently did announce a new dividend increase for the next dividend payout, which is massive. And to be more specific, this is more or less every single dividend that DGRO has paid historically. And right here in this column, it says percentage change from previous year. This is how much year over year the dividends have been increased or decreased. And as you can see, basically every single quarter since this ETF started trading, the dividends have been getting bigger and bigger and bigger. Some years upwards of 40%, but a lot of times on average, at least as of the last few years, the dividends have been increasing around 10 to 12%, which is outstanding. Now, this brings me into the most recent dividend increase. There's a lot of speculation that a lot of these ETFs that previously have had some very healthy dividend growth, because the way the economy and the market and the underlying holdings are, there isn't going to be as much dividend growth moving forward. But with DGRO, at least, this is not the case. The June dividend that was just announced as of recently is actually up 12.9%, and this is from the previous year. Now, to be more specific, the previous June dividend was 25.97 cents. This was paid last year in 2023. The most recent recent one almost 30 cents, which is an insane increase, especially in the context of an investor stacking tons of shares of DGRO long term, and in this case getting paid 12% more from the previous year. Now, a real life example of this, I recently came across someone on Twitter that said that they were holding 1,600 shares of DGRO. This is just one example. Obviously, so many investors out there have much less or much more than this, but one example to go off of, a real life example. With that position of 1,600 or so shares that investor shared, they are getting an increase in dividend payouts for this next dividend from the previous year of around $72 to $75. And the best part of all this is from doing absolutely nothing. Now, I understand what you might be saying. Maybe I still have not sold you the dividend growth style ETFs that pay more and more in dividends over time aren't necessarily even worth investing into, but I promise you stay tuned, because in a video I'm going to be posting in the up and coming days, I'm going to show you exactly what a strong dividend growth rate like the one that we see from DGRO can turn a portfolio into. And we're going to be going through a portfolio that isn't even worth all that much money, and I promise you some of these numbers are going to shock you. Now, lastly, with DGRO's dividend increases and the fact that this ETF just seems to keep going up in price over the last 10 years, because this ETF now has been trading just around 10 years. As of the filming of this video, an investor that invested $10,000 into DGRO and reinvested the dividends along the way would have turned that $10,000 into almost $30,000 in just 10 years. Or to be more specific, a total return of around 192% and an average annual total return of over 11.3% per year. Dividend growth rate is honestly one of the most important metrics that I really try to keep in mind building out my long-term dividend growth portfolio. And this is simply because as I inch this portfolio further and further north as far as total monthly and total yearly dividends, if I buy into assets like DGRO or like STHD for that matter, that at least historically have paid more and more in dividends over time, it's going to give the portfolio a boost in dividend income without me having to purchase another share, which sounds amazing. Now, one of the main reasons I am actually very interested in making DGRO maybe possibly my future daily buy as far as a dividend growth position is the fact that the top holdings, in my opinion, are honestly a lot like SHD, only better in certain ways. Now, I say this because there are definitely some familiar faces in here, a lot of different stocks that SHD also holds, of course. But there's also different top holdings like Apple and Microsoft, which actually make up around 6% of the overall ETF, which I like because as a younger dividend growth investor, I think these names are going to give DGRO some massive growth potential long term. Now, for these reasons and more, I constantly kick myself for not buying into more of these high quality dividend growth style ETFs a lot earlier in my investing career, but it's never too late, and I still am personally buying a ton of SHD, DGRO, and DGRW, and I'm going to plan on doing so for the next several years. And this is simply because if you buy into an asset that consistently pays you more and more in dividend income year after year, especially if we're talking 10% or upwards of 10% per year, you are looking at an investment vehicle that's not only going to keep up with inflation, but will potentially make you very, very rich in the future. But when it comes to the iShares Core Dividend Growth Style ETF or DGRO, I lastly want to hear from you guys down below. Are you currently holding onto any shares of DGRO as of right now in your portfolio? And if so, how many shares do you have as of right now? If you enjoyed this video, make sure to please drop a like and subscribe for more future content like this. Thanks as always for stopping by, and if you are interested in investing, make sure to check out these recent videos I posted right here.